Greetings and a hearty welcome to our Commodities audiocast. I'm your host Ravindra Rao, representing the Commodities Research Desk at Kotak Securities. As is our tradition, we are here to furnish you with the most up to date trends and invaluable insights that can serve as your navigational beacon in the ever evolving realm of trading. Without further ado, let's dive right in. Another vibrant week came to a close. Nonfarm payrolls data pleasantly surprised by exceeding expectations, while bond yields sustained their upward momentum. Elevated bond yields and the enduring strength of US dollar continue to exert downward pressure on commodities. The yield on 10-year treasury notes has recently soared to a 16-year high of 4.88%, showcasing the resilience of the US economy in the face of higher borrowing costs and sparking speculation that Federal Reserve may need to keep interest rates elevated for an extended duration. This environment has contributed to the ongoing decline in commodity prices. On the economic data front, the US ISM Manufacturing PMI for September showed positive trends, while ISM Services growth remained robust. The labor report painted a robust picture with the job growth hitting a 8-month high of 336,000 in September, surpassing market expectations. Wage growth remained steady, falling below forecast, and the unemployment rate held steady at 3.8%. These factors underscore the US economy's resilience to rate hikes and reinforce the Federal Reserve's commitment to maintaining higher interest rates for an extended period. Gold prices have experienced a second consecutive weekly decline as 10-year bond yield surged past 4.8%. Gold is currently trading near in fact, it was trading near its lowest level in 7 months till last week, influenced by a hawkish stance of a Federal Reserve. Silver also witnessed a decline, reaching its lowest point since March 2023. Market attention is expected to shift towards next week's US CPI data. Also, the geopolitical risk in the Middle East after the attack on Israel might lend support. We have already seen an up move of almost 1% in gold and another 1% in silver in today's morning session. So this might the geopolitical risk might lend support to the precious metal prices. In terms of price action, COMEX gold found support near the November 2022 lows at around $18.25 per troy ounce. As long as the support level holds, there is a potential for a short covering to push prices up to $8.80 per troy ounce. It is already up by around 17 odd dollars, $18 towards 1865. So another 15 to $20 upside is a possibility, which is a very good resistance. However, a closing price below 1820 per troy ounce could pose a significant threat to breach the psychological level of 1800 per troy ounce. On the flip side, if it sustains above 1880, then again there is a possibility the bulls might eye the $1900 mark. Coming to crude oil, oil prices, oil futures recently posted their most substantial weekly loss since March, experiencing an 8.77% decline over the past 5 trading sessions. This decline comes on the heels of the market hitting a 15-month high of $95 per barrel on September 28th, with growing concerns about demand unsettling investors. This we feel that this is more of a speculative in nature because since September the prices have gone up from 85 to 94 or dollars, and from 94 it has again come back to $82, and today again because of the geopolitical risk which has been sparked due to attack on Israel, prices have again shot up towards $87. Additionally, the strengthening US dollar and surge in bond yields had contributed to a sense of caution among the market participants, because of which the prices have corrected from the higher levels. But due to a significant development on over the weekend with an attack on Israel by Hamas, the market attention towards might shift towards the potential involvement of Iran in attacks, an allegation already made by Israeli authorities. Should Iran's role be substantiated, it could introduce imminent downside risk to Iran's oil supply and exports, potentially leading to further supply constraints in the global market and thereby supporting the prices. In light of these developments, the outlook for crude oil suggests a stabilizing trend, with prices expected to hover in the range of $80 on the lower side, and on the higher side $88 to $89 should act as a cap. as the prevailing supply tightness continues to influence market dynamics. Finally, weakness in base metals persisted with some signs of recovery observed on the last trading day of the week. Uncertainty regarding US interest rates and an uneven economic recovery in China have continued to weigh on market sentiments. LME copper fell below 7,900 per ton for the first time since May, influenced by lower than expected US weekly jobless claims. Additionally, rising stocks at LME warehouses, which have surpassed 169,000 tons, the highest level since May 2022, and more than tripled since mid-July, are putting pressure on copper amid dim demand prospects. However, on the price action front, it seems copper has taken support near around 695 on the MCX, and the resistance is close to around 706. If that is taken out, we might see prices moving higher towards 715, 716, which is a good possibility. As of this podcast, the prices are trading around 1% higher in today's morning session. So we might see some kind of a bounce back in base metal prices due to some weakness in the dollar. Yes, one more important thing to note is dollar index in the dollar index chart. There is a shooting star formation on weekly charts, and this is slightly negative for the currency. And if it closes below the support, the confirmation would come if it closes below 105.95 on a weekly basis. If that happens, we might see a corrective move in dollar index, which might extend towards 104.68, and that might be positive for almost all commodities. Well, the upcoming week will be closely watched. Sorry, the current week will be closely watched for a US inflation print for September. It is expected that the consumer price index for the previous month will show a 0.3% increase, marking a decrease from the 0.6% rise recorded in August. Similarly, the core index is projected to exhibit a comparable 0.3% increase. Furthermore, there is an anticipation of slight deceleration in the headline annual inflation rate, with expectations pointing to it moderating to 3.6%. Investors will also closely monitor the release of FOMC minutes and speeches by various Federal Reserve officials to gain deeper insights into the central bank's monetary policy. And with that, we conclude another episode of our commodities audiocast. Wishing successful trading and the very best of luck.